The trade of the decade might very well be upon us as we look into an absolute bomb that Cathie Wood just dropped on her Twitter this morning. Now, if you guys don't know Cathie Wood, she is a legendary mainstream stock investor who also dabbles in cryptocurrency. She's just a tech futurist investor and one of the most visionary in the entire mainstream and crypto markets. You're definitely going to want to understand what she's saying here as it lines up with one of the most incredible opportunities in crypto and beyond as far as an investing landscape is considered. So go ahead, smash that like button if you're excited to learn about what could be the trade of the decade. As always, I'm not only covering these macro movements, but helping you with individual coin picks and other types of actionable data. If you guys want to follow my most up-to-the-date information, make sure to follow me on Twitter at EllioTrades. And with that said, let's dive in. So Cathie says, today we learned that in November, retail inventories rose more than 2%. Essentially, this means the amount of inventory that retail stores have on the shelves, the fastest pace since the 90s. Obviously, we know this was in concert with supply chain issues, so a lot of stores were stocking up, buying extra inventory so that they could fulfill demand just in case the supply chain had hiccups. Now, meanwhile, imports jumped 4.7%, meaning we were buying even from other countries, and exports dropped 2%, meaning that less people were buying from us. Unfortunate. Moreover, the real consumption, including services, was flat, and the savings rate dropped to 6.9% below pre-COVID levels. As measured by the University of Michigan, which I believe is the best monthly survey on the consumer, sentiment during November and December dropped to a level last seen at the worst of the crisis in 2020. In this context, the percentage changes listed above make sense. Now, just to summarize what's happened so far, essentially, we're buying more stuff, stocking up on inventories, actual economic activity is slowing down, and there is a big disparity here that actually signals a pretty bad problem, and sentiment is plummeting. Now, she adds on to this fire by saying that these changes are not annualized, so multiply them by 12 to understand the drama unfolding here in the US. Both businesses and consumers seem to have overreacted to the supply chain bottlenecks by building inventories of goods while the government stimulus was flowing freely. These developments are not new. During the third quarter, real GDP was up more than 2% at an annual rate, but real final sales, consumption, investment excluding inventories, government spending, net exports were flat. Effectively, all the GDP growth that we had was from inventories that effectively we might have overreacted building up and we might not actually need. So here's where this becomes a really big piece of information, and this knowledge bomb, I believe, could help you strategize for 2022. It falls squarely in line with what I believe is going to happen, which I'll explain here at the end of the episode. So make sure you watch to the end because this is when I break this all down and make it actionable. Now, Cathie says here that this buildup, along with mergers and acquisitions and IPOs, reminds her of Y2K. This time, however, the excesses are likely to be in industries that technology will disrupt. Now, if you remember, Y2K was all in technology industries that were essentially way overvalued. We had the dot-com bubble, and that came crashing down. But what she's saying now is that the actual excesses are in the disruptees, not the disruptors. She's saying energy, financial services, and transportation, among others. If so, the disruption will be the flip side of Y2K, completing the circle, meaning that instead of what happened in Y2K repeating, maybe this time on a NASDAQ-wide level or on a crypto-wide level, she's saying that the wash is coming to non-innovative, non-tech companies, specifically in energy, financial services, and transportation, among others. Moreover, and one of the biggest points she makes here, is that fears of inflation will give way to confusion and fears of recession during the next 3 to 6 months. If so, the rapid growth rates of truly innovative companies, many of their equities maligned this year, should be rewarded handsomely. What she's saying here is that what we're worried about right now, what the Fed is worried about right now, is overinflation. The economy getting too hot, too fast of growth, essentially the rich getting ultra giga rich, yet the economy not keeping up and creating wild inflation. Now, Cathie Wood's view of the world is that this climate is going to switch dramatically over the next few months, and that the fears will actually be for recession, not for an overinflated, overly heated economy, meaning that the talk from the Fed, from Jerome Powell, is not going to be hawkish and stern, raising interest rates and trying to tighten economic economic policy. No, in fact, it's most likely to flip the script and have them become more dovish, more friendly, and more stimulus oriented. And we all know how that ends. As we've seen from 2020, where the flu, which we all thought would shut down the economy and bring prices crashing to zero, actually brought stimulus and prices going to the moon. It's all about thinking one or two steps ahead, one or two moves ahead on the chessboard. And in this particular instance, we're seeing tough talk from the Fed. But let's fast forward to the next chapter and see how this ends. And I personally of the belief that that tough talk is very short-lived and that the Fed will do whatever it needs to buoy the markets. They won't, however, send the markets into hyper overdrive, get-rich-quick lottery ticket style investing. That is not what the Fed wants. They do not want you to 1000x on your Apple stock, but they do want sustainable long-term growth of assets. So insofar as that is not happening, they will most likely start buoying the economy again. I do believe this is the biggest trade of the year, is understanding that there will be massive fear induced across the markets, and that fear will eventually manifest itself as a slowdown of the economy and then massive government intervention to then speed the economy back up. And what we'll see is that that money will get dumped into, once again, the most innovative and most prosperous tech disruptors. And that includes the majors over there on the NASDAQ and, of course, our beloved cryptocurrency. Make no mistake, when this happens, crypto will go absolutely insane and parabolic. And that is possibly the trade of the decade, like we saw back in 2020 in March. That was one of the biggest opportunities for anyone to create intergalactic wealth, was bidding that collapse for any time really in 2020. And I believe the writing is on the wall for it to happen again here in 2022. Again, as we're seeing right now, NFTs are getting super hot, just as the altcoins have stopped printing easy gains. As we've predicted time and time again throughout Q4 here on this channel, as soon as altcoins stop printing money, NFTs are going to go crazy. And that's exactly what we're seeing. So we're going to start kicking our NFT content up tenfold so that you understand how to play this particular market and also understand why I'm passionate and why I see the value in the projects that I see. Again, I'm just one guy, and if you're using this channel alone as your only information for how to navigate crypto, then you really are not going to make it. You need to be using a ton of resources, combining information, and checking validity of any and all sources. Again, I'm here to share my information and share my knowledge, but I should not be your one-stop shop. You need to do your own research. I hope this episode has helped you out, and if it did, smash that like button. I believe that 2022 could present some of the biggest opportunities in history, and if played properly, if understood properly, you can get many steps ahead and crush it. That said, I'm EllioTrades. You can find me on Twitter at EllioTrades, and I'll see you very soon on the next episode.